Let me ask you first about the pound action. That was fascinating. We were worried that any agreement could trigger, stop losses for euro pound, and it seemed like things kind of went the other way. Was it buy the rumor, sell the news this morning?
To some degree. I mean, the pound hasn't had a bad week, really. If you think that the news got pretty bad, euro sterling has been, tracking relative interest rates, quietly doing its thing. It reacts more to good news than to bad news, but it's been holding up quite well. I think that's probably the right way to describe it. So maybe a few people are longer than we think.
Well, indeed, it looks like people were buying the dips. I mean, the immediate reaction, if you got into this thinking that an agreement would be reached, was to take profits off the table. Now we've seen cable at least come right back up to where it was when the headlines came out, above 135. Where do you see it going?
I think cable's still got upside in the longer run, but I think what happens to cable is going to be determined much more by what happens to eurodollar. Eurodollar goes on going down. I don't think we'll see cable able to push on much further. But, underlying position in the short term, this thing still reacts more to good than to bad news. And if we get a softish non-farm payroll number, say, this afternoon, then I think we'll push on. But let's call it 137, 132 for the rest of the year. I don't think we're running wild at this point.
Are the Brexit issues the most important for the cable pair, or is what's going on in the U.S.? I mean, we've got a lot going on there as well, right? You've got the tax reform over there. You've got the debt ceiling over there, the possibility of a government shutdown. And then as you say, we've got non-farm payroll numbers, so even the economy is important to that pair.
Yeah, and so the wider dollar story probably matters at the moment as much as the UK story. So what we've done here is we've taken away one piece of uncertainty. We're going to move on to the trade talks. We're going to move on to a period of adjustment. But the big uncertainty is the economy going to be as weak as all of the economists have been telling us? And it seems likely with rates unable to go higher, in which case the pound will not strengthen much over the longer run. In the short term, how much does the tax deal add to the U.S. economy? Does it make the Fed rethink? Not how many times it goes next year, but is the peak in Fed funds going to be closer to 3%? A bond bear's finally going to see a 3% 10-year note yield? That would be very bullish for the dollar. I doubt that's what's going to happen. But right now, the market is trying to position itself long dollars in anticipation of a sell-off in the bond market because of the tax deal.